Hello traders out there in Traderland, D7 here with Grok Trade, and I'm here not in my office but in my Tampa home. First thing we're going to look at is the monthly chart. The month isn't over yet. We have a week and a half to go before the month's over, but I just want to take a look at what we're looking at on the monthly chart on the S&P 500, which is the 500 largest blue chip companies in the United States. And we're looking at every bar that you see here is 1 month. A couple things that I'm looking at. If I zoom out, this is what I want you to pay special attention to on the S&P 500 monthly chart. Is we had a sizable drop in 2022. We're trying to claw back at this moment, but do you see these two lines? This is a rising wedge. Rising wedges are more bearish than they are bullish. I love the fact that the MACD dropped down and now we're back above the zero line. That's really bullish. But the question is, how long will that last? Because right now we're seeing some light ticks on the histogram going down, almost like we're wanting to roll over soon and head back south. So it's something that I'm watching for. We were very oversold. This is the RSI, very oversold in this area. And we did go higher because of being oversold. My Grok Rock algorithm had two buys down here at the same area, had buys right here, and then we did in fact go higher. Very, very good thing. Now watch, a bullish thing, I would say that. If I go and zoom in a little bit, that is a good thing. The problem is we're in a big rising wedge, which is more bearish than it is bullish. The other thing is I added these two lines and I'm encapsulating these candlesticks, which go back to right around September 2022 and to current. And we have a week and a half to go before that candlestick actually becomes static, unmoving. It's still dynamic at this moment. All that means is this thing could change. But let's say it was the end of the month and it looked like that. Can you guys tell me in the comments what type of reversal pattern that is called? We go up, up, up. We get this candlestick with this long lower shadow. All right. So that is in fact a candlestick reversal pattern. And on top of that, we have this rising wedge within a larger rising wedge taking place. Furthermore, you see these horizontal lines coming across there. I pulled a Fibonacci line on here. I went from the upper area down here to the lower area, and now this has gone to the 50% Fibonacci retracement, heading towards the 61.8. I'm not sure if it'd be strong enough to get there. So this is a really good area for a reversal to come in. So this becomes a bear pullback. So down, 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 bear pullback, and then down, down, down again. If we do go down, down, down again, and we break this lower trend line, that's going to be bad news. Matter of fact, do you guys see this dotted line coming across? I added a thing where it says, holy smokes, the SPY could be in real trouble here. This is an alert that I set on TradingView. TradingView is the program that we all use here. TradingView allows us to do a lot of cool stuff. We have a link down in the description with TradingView, and you can use it free of charge. But guys, I'm watching that like a hawk, and I think you guys should be too. Quick look here at the NASDAQ. Down, 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 little bear pullback. We just passed the 50%. I don't want to see it get any higher than 61.8 to be a valid bear pullback. We're coming into a sell zone. The question is the MACD, are these lines looking like they're going to cross over? It doesn't look like it, but if I look at the histogram, you can see we're going smaller, smaller, smaller. That means we're getting tighter, tighter, tighter. So that could be happening fairly soon. Fairly soon. That you could see here, we had this lows, and this lows we had the RSI very oversold, and then people bought into that weakness. We had two buy signals down there on the Grok Rock, and sure enough, we went higher. Another thing I like to look at here is if I could take a quick look at the financials on the monthly chart to say what's it doing. Well, it's showing us a symmetrical triangle. It hasn't been nearly as bullish as the NASDAQ and S&P. Small caps have actually gotten really weak. Now they're on the wrong side of that triangle. If I go to a line chart, you can see this for yourself. We come up here, and now we're down below it. Do you guys see this? We're below these moving averages, and we're below this trend line. That's no bueno, no bueno. So this is showing relative weakness here. MACD never did get above the zero line. It hit the zero line and now has gone negative. You can see this. See this? went up to the zero line and now dropping. Very relatively weak. We never did get a buy signal here. Do you see this on the Grok Rock? It never happened. The last buy signal we got right here on our algorithm was here. You can go to Grok Trade to look at the algorithms. If you like the information I'm giving to you right now, it doesn't cost you anything. Give me a thumbs up, please. But we're going to dive deeper here because there's more information to extrapolate. The other thing I really like to look at is the financials, monthly financials. What's it doing? Well, it started to pop up here. We didn't get a buy signal. It was short-lived and it come crashing back down. Last time we got a buy signal here on the monthly, it was back here on these buys and then boom, straight up. But here's the problem. We got a symmetrical triangle. And on the MACD, we're below the zero line. That is no good, guys. No good. So that's showing that small caps, Russell 2000, and the financials both going down. Well, what's going on in the U.S. dollar? U.S. dollars also showing a lot of chop. Nothing really happening here. We're above the zero line on the MACD, which is a good thing. We were way overbought here, and you can see on our Grok Rock algorithm, we only had one signal, and it was a sell signal on that spinning top. So that would have been a good place to sell, obviously. So nice hit there. And so that's what we're seeing. Quick look here at gold and silver before we get into the others. Gold and silver on the monthly chart. Gold is at a major area of resistance. If I zoom out here, you can see this big area of resistance. So gold monthly chart is at major resistance. A lot of selling taking place at this area. I'm not sure I would want to be a part of this. Last signal that we got here was a sell signal, and that was right here on that doji and that hanging man doji thing, and then it did go down. We did not get a buy signal here. It did go up though. Silver, if you go here, silver, big symmetrical triangle. We're at resistance. We're showing a reversal pattern, a bearish engulfing at this moment. And the question is this going to crash down here? Will this crash down or will it break out? It's looking more bearish to me than bullish. Look at the MACD. So anyway, those are a couple things. The VIX, though, is at all-time lows. But let me show you the monthly chart, guys. This is crazy. We're down right now under 17. And we're at a major area of support. Do you see the last time, if I go to a line chart, you can see this. Last time we were at these areas of support, we rallied back up. We're there again. Is this going to rally back up? Is that going to happen? Maybe. If I go here to the MACD, it looks like we're crossing over at the bottom, like it's wanting to go higher. If that goes higher, that means this is going to bounce off these supports and go higher. That means if VIX is going higher, that means the markets are going lower. A lot of bearish activity when the VIX goes higher. We're at major support. All right, well, let's go down to the weekly chart and say what's really going on a more of a micro level. On the weekly, if you call that a weekly, if you look at the IWM, actually, let's just go to the spiders first. If you look at the spiders, the thing that jumps out at me here is we had this symmetrical triangle right here. You can see this, and we bounced up, broke the symmetrical triangle back in March, and we go higher above these moving averages. Very good. The problem is we have this now. We have a rising wedge, and if you look here, we're going higher. Let's see if I take this line. Actually, I gotta keep that line here. This line, if you look at this, if we need to get over those two lines for it to really get bullish. If it fails to do that, we have a bullish tick here on the histogram MACD. If we can bust through that, that is going to be really bullish. So be watching the spider, and can we get over this line? Say 423 area. Can we get above 423 and stay above 423? Very important. NASDAQ, if you go here and look, I mean, guys, last week was a real big move. Boom to the upside, breaking a support level. Really bullish to see. We are way overbought right now. Do you see this? Way overbought. So this is it'd be a bad time to get. I mean, look at this. The last times, guys, that we were overbought right here was right here, and look what happened after that overbought. So this last time it got to this overbought, it dropped for almost a month and a half. So we're overbought there again. This is a dangerous place to be looking to try to be buying because of this overbought area. The weekly chart again on the small caps. Are we seeing any strength? No, we're seeing nothing but weakness. Down, and then for the weeks just been going below these moving averages. We cannot find any strength here. A lot of chop, a lot of nothing going on. This is relative weakness. If it can't get above these moving averages, woe to the markets. If this turns out to be a low base and it breaks down, especially if it breaks down this IWM, if it gets down below, let's say 163 area, 164, it could be really, really troubling if it gets down below there and stays there. Okay, what are the financials doing? The market's only as strong as the financials. Very weak symmetrical triangle. We broke down, we come up, it's a resistance, and now we're finding resistance, and we dropped. We're below most of these moving averages. We have big red coming across, and we need to find out what it's going to do here. Financials are something we need to be paying very special attention to. I thought it had a chance to come back up, rally back through in here, and then explode higher. It just did not do that. It started to go above and then immediately came back down. That is no good for the overall markets and the strength of the underlying markets. US dollar weekly chart, if you look here, we have a jab. So we have this big trend going up, and it is pinchy, so it's a rising wedge on the big time frame. But look how we dropped down below it. This was in May, and then right here in, well, it was May, beginning of May, middle of May, we rallied back up. Do you guys see this? This is called a jab, and then we went bullish after that. US dollar the last couple weeks have been very strong, putting a lot of pressure on the markets as a whole, and gold and silver. But that's something we're looking at. Usually after a jab like that, you'll get a rally and something to be paying attention to. So gold, if you look here, sure enough, it's selling off last 2 weeks because US dollar. The other thing that I'm seeing on gold is we have this higher high but a lower high on the MACD. That's a bearish divergence, and we're over these oversold areas. Do you see that? Very oversold. I've been saying this for weeks. Gold is one of these things that I think has had its run. It probably needs to give back quite a bit here to, if it can stay above this moving average, the 20-week moving average, and this trend line, that would be really healthy for it. But if it cannot, this is just a dangerous place to be long here. If you go here to silver, same thing, big sell off. We have a big bearish divergence on the MACD, but we're at major support, rising 20-week moving average, and so it's telling me we have a chance of going higher here. It needs to heal itself if it's going to do that, but that means the US dollar needs to get weak for that to happen. The VIX, we looked at the monthly, the weeklies, it gets down into these areas, and every time they get down to these areas, man, they just bounce right off of them, and that's where we're at right now. So the question is, will the markets get weak? And if so, the VIX will break through these trend lines like a hot knife through butter. And quickly on the micro molecular level, let's look at the daily charts. And I'm just looking at daily charts on a line chart here. If you look on the line chart, this is gold. Big divergences, bearish divergences. We're down, but look at, we have buys down there on the daily chart on gold. It's saying that we're oversold, and we kind of are here. That there's a buying opportunity on the short time frame. The big time frame says no way. Silver, if you look here, big bounce off of the support level. Do you see that? Big trend line. We get a bounce. We got a buy signal on the short term, and we're way oversold. It's just, it might be a short term buy opportunity on gold and silver. VIX, I don't want to keep pounding this, but it's a falling wedge, and we're below these moving averages. We got a buy signal here, but it's that buy signal is not painting out yet, but it's warning us, saying that this thing could be ready to go up. So something we're watching. But the real big is the S&P 500. What's going on with this big dog? Big dog broke a major trend line. I think that was Thursday. Let me go here. Yeah, Thursday we broke that. We gave back a little bit on Friday. big move to the upside. But now we have this bearish divergence that's happening on the MACD centered oscillator. So it just looks like it's been a lot of chop, guys. This chop that we've been in has been a nightmare to trade in. Very difficult. The times from, I would say, from January through January and most of February, very choppy. Do you guys see that? You come over here, and again, from beginning of man, if you look at, in March area, from March to where we're at now, look at all how we're just choppy, going sideways here. There's a thing called CI, or choppiness index. The CI, you can read about it at freeonlinetradingeducation.com. But the chop has been very severe, very, very high. It's just a real difficult environment to find a decisive direction, one direction or the other, because as soon as it starts to make the move, it just gets destroyed every time it does. So it's something to be watching. Okay, very, very important to try to not trade too much in the chop, because it can be very, very bloody. NASDAQ has had this stellar run to the upside, had this rising wedge. Wednesday it broke it, Thursday it popped, Friday it's like, okay, let's start to get back. Are we overbought? Well, big time high on there, really, really high. MACD's rolling over, negative ticks, or not negative ticks, but declining ticks. MACD almost gave us a sell, really, really, really close to a sell. It just did not give it to us. When I say MACD, the Grok algorithm rather. Russell's 2000 daily chart, up, up, up. Friday was a big sell-off on decent volume, and the question is, on this monthly chart, can we broke out of the symmetrical triangle? Can we continue to do that on this daily chart? But look at the chop we've been in, guys. This area, all this is just choppy sideways consolidation. That's all this is. Very, very difficult to be trading, and just be careful in this sort of market conditions. If you look here at the financials, we're at a major symmetrical triangle, major resistance right now. That's where we're at. We're at a sell level. We don't have the sell signal on this. Last time we got a sell signal was right there on that sell signal, and sure enough, we've gone down. We got close to a sell signal, just didn't get it. Our buy signal was right here, and it did go higher. Not too bad. This buy signal went higher, the Grok algorithm, so which is kind of helpful to kind of show us the direction and way. Nothing substitutes for trading education, learning specialized knowledge to help, and we think the best way of learning is the mentor. And I think you guys would agree with that. You wouldn't learn to do heart surgery without having an instructor by your side, right? A well versed heart surgeon helping, showing you the way. Or learning to fly a plane, you want to have your instructor with you the first time you go up into the friendly skies. So mentoring, I think, is the best bang for the buck. We do have a mentorship program coming June 9th, 10th, and 11th. Feel free to inquire about that. Yeah. So June 9th, 10th, and 11th. But anyway, so there it is. And if you like this information, doesn't cost you anything, please give me a thumbs up. Thumbs up, my friends. Appreciate you. And I'll share this with everybody. That thank you for your comments on the last video. And I wanted to share with everybody that my wife and I, Janelle, we are celebrating on May 30th our 25th wedding anniversary, our 25th. And how many years have you been married? Put that in the comments, please. I want to know how many years. And my wife and I, we had our honeymoon in Northern California. When I say Northern California, way up there by Oregon, near the Sequoia Forest, near Eureka. But it's a little place called Ferndale, and it had this ornate, very old Victorian bed and breakfast, which has the Empire Suite. And look it up. It's called the Gingerbread House Empire Suite, and that's where we had our honeymoon. Lo and behold, 25 years later, that is still in existence. The room is still in play. The only change they made was they added a couple televisions to the room, which I'm not a fan of. But nonetheless, they haven't hardly changed anything. The whole town of Ferndale, California is on the historic registry. They can't have chain restaurants in there. Everybody has to abide by certain things, and this special establishment is still in play. And we're going to fly into San Francisco, and we'll be out next week, and we'll probably spend a little time in Napa Valley doing some B&Bs in the area. And we'll mosey on up, and by the but we're going to be gone a week and a half or so. And but anyway, very much looking forward to it. We we could use the getaway. um, and we just appreciate life. And give me this moment just to say this. We appreciate you. We appreciate all of you. If you've been following me for a day or a year or 10 years or more, I just want to say I appreciate you. You are the reason why I do these videos. And I know I've been a little sporadic on these videos, and I hope that you give me some grace on that. But even though I'm not in the office and I don't have my fancy setup with my cameras and my lights and everything, you guys don't care about that. You don't care that I'm sitting on my in my living room on the couch, in Tampa. Um, I live in a town called West Chase, which is north side of Tampa, and it's a beautiful, awesome neighborhood. And so, anyway, I'd like to talk to you guys that if I could put on the mentor hat here for a second and say this: trading isn't easy. It's not easy, and that's why 87% of all professionals can't beat the markets. You can't beat the markets. Trading is one of those things that, unless you have impeccable discipline and a strong emotional resolve, with the understanding you have a foundation of specialized knowledge that you can lean on, the chances of making consistent profits in the market, especially in these type of market conditions, very difficult. And sometimes it's good to step away from trading for a bit, or to paper trade, which is hard for a lot of people to do when they like the endorphin rush of having money on the table. I would encourage you to say, if you're not seeing progress and you're not liking the consistency of profitability, I would encourage you to change things up a little bit. And don't make the mistake like a lot of people do before they come to a mentor, is where they swing for the fences. Guys usually could be fearless, but when fear does grip them, we guys, we make some stupid decisions sometimes, and we'll swing for the fences. We'll push everything in the middle of the table, hoping to get our money back. An amateur move. It's an amateur move. Never play that game. Instead, hone in on a trading plan and find one that's packed full with solid trading rules. The trading rules are only valid if and only if those rules have been proven to increase probabilities. Okay, so I hope you're following me here. If you have a rule set that you have tested or others have tested, and it does in fact increase probabilities, add those rule sets onto a page and make it and design them in such a way that those rules work together in tandem. You can't have rules that don't work together. They have to all work together in your trading plan. Once you have that, don't deviate from it. Study it, work it, paper trade it first, do small amounts of money second, and test it for yourself. Only increase risk exposure if and when you are seeing a consistent move in the right direction. But it all predicates down, I mean, when you extrapolate it down, you boil it down, it the intrinsic embodiment of a great trader has the foundation of specialized knowledge. And because they have a trading plan that's packed full with great trading rules that are in fact increased probabilities, then they have done a good thing for themselves. These individuals are on the right path, going in the right direction. And I mean, think about it. As traders, we're all climbing a ladder. But the question is, are we on the right wall? And we have to be on the right wall. Okay? So anyway, thanks for the thumbs up that you gave me, assuming that you did. I'll be back in a couple weeks. So anyway, again, a reminder, how many years have you been married? Leave it down in the comments. I appreciate all you guys. Love you guys. We'll see you. Bye. Guys, why are you still here? You're supposed to be gone while I still have you. If you haven't joined the 301 mentorship yet, seriously give that some serious thought. Mark the Meerkat's been trading a long time in the markets. As you know, I have too. We take people under our wing and we teach you what we do to trade in the live markets. We trade a significant amount of money on a day-to-day basis in the live markets ourselves. If you're going to learn from anybody, learn from us. It's the 301 mentorship program. We've been doing this a long time, and we're happy to help you. The algorithms, that's a no-brainer. Get in on that. Let the algorithms help you down the path. Education with specialized knowledge with trading algorithms makes you unstoppable. There you have it. Now, get out of here.